Hi, welcome to the May 2016 interest session for the Partnership Program toward Home Purchase with Bend Area Habitat for Humanity. Today we're going to cover an introduction to Habitat for Humanity. We'll talk about the Partnership Program qualifications. We'll discuss a little bit more about affordable housing and our Habitat Partnership Program and how the two relate. And then I'll finally get to the two-part application process and timeline, and I will try to give some question and answers that were covered in previous Habitat orientations. Bend Area Habitat for Humanity is one of several affiliates in Central Oregon, and as you can see, there are 4 other affiliates that build in our region, and we all operate under international guidelines for Habitat for Humanity. However, each affiliate has its process that is unique to them. So although we might build 6 to 10 homes per year, Redmond Sisters Habitat might have a slightly different schedule. So if you live or work in those areas, then you will want to contact those affiliates directly. Bend Area Habitat for Humanity was founded in 1989 by a group of concerned citizens that wanted to address the issues around affordable housing in Bend. And then in 1996, our restore opened. If you haven't been to the new location of our restore, it's on 3rd Street. We moved in December of 2014. And it is a used and surplus home improvement center, accepts and picks up donations for a wide variety of building materials and appliances and home furnishings. It's a great resource, and all the proceeds go to benefit Bend Area Habitat for Humanity, hardworking local families towards home ownership. To date, we have built 110 homes. Through the next series of slides, we'll talk about our partnership program qualifications. These include need, ability to pay, and willingness to partner. We'll break down each of these areas in more detail. So the need for housing can include things such as substandard housing. Are you living in a rental that has a lot of mold, poor heating? Are you in an overcrowded space, or is your housing, as many are experiencing in Central Oregon, overpriced? Is your neighborhood unsafe? There are a lot of police activity. Special needs we take into consideration of yourself or your family members. And have you been unable to qualify for a conventional home loan? That can be also considered under need for housing. And if you are in the midst of a separation, we require a divorce decree so that we can ensure that assets are safe in either person's name. And if there's a residency issue, we need to make sure that there's proof of residency for at least the applicant that is income qualified. And we'll talk about this in a little bit more detail as we go. In the next few slides, we will talk about our ability to pay guidelines in regards to paying a mortgage payment, and we'll look at the underwriting guidelines and what all of this means to you. So the income guidelines are based on your household size, and that means the number of people that are going to be living in the household in the Habitat home. We look at income, we look at assets, we look at your credit. So we pull a credit report and we look at collections accounts and judgments that might be there. We'll check your debt against your income. And if you've declared a bankruptcy, it must be at least 2 years old from the discharge date. And we look at the proof of legal residency, as I discussed earlier. So we need that to happen for at least one applicant in the household, and that applicant needs to also financially qualify based on the legal residence income. So if you're a family size of 4, you can look at that income guideline at a minimum of $23,880 and the maximum at a little over $44,000. And so the legal resident must have income within that range for the family size. Now these income guidelines change annually, and they're based on HUD, Housing and Urban Development, for our area. Ability to pay is also about looking at your debt to your income, or DTI ratio, and we'll give you an example so that you might be able to also figure out your debt to income ratio. And this is important because it shows how much money you have left over to pay for your housing expenses and other debt obligations. And we want to make sure you can still afford your food, your clothing, your transportation, your medical care. We don't want to put anyone in a position where you cannot meet your basic needs, so your housing costs are a part of that debt to income ratio when we look at a long-term debt to income ratio. But let's start by looking at your short-term debt to income ratio through an example. So Samantha works 40 hours a week at Safeway and she earns $12.50 an hour. She gets paid weekly, and Samantha also has a 10-year-old daughter that receives Social Security income of $650 every month. So these are the only two sources of income. So Samantha is a single mom and her household size is 3, because she has 3 children, so her household size is actually 4, including Samantha. We figure her gross annual income, so gross is before taxes, to be $33,804, which works out to be 63% of the area median income. So you can see how we took her working wages, multiplied that times 40 hours a week, and then we multiplied that weekly income by 52 pay periods, and then finally multiplied that number by, or divided that number by 12 to get her monthly income. And then we added her daughter's Social Security income in there and came up with a total monthly income. And we'll move on to the next slide and compare that to her debt and continue working that formula. So let's look at Samantha's debt. And when we talk about debt, we include just your monthly revolving regular payments such as credit cards, student loans, medical bills, vehicle payments, and any other loan payments or family support payments. So it does not include utilities, groceries, or other miscellaneous expenses. So we looked at Samantha's minimum credit card payments, which totaled $50 each month. She also pays $150 a month on her car loan. And she recently graduated from college and she has about $2,500 in deferred student loans. So we look at her total monthly debt, and we estimate her student loan payments since those aren't due yet. And if you're on deferred student loans, we'll also estimate your student loans at about 1.5% of her total amount that she owes. So that turns out to be about $38 a month that we estimate her payment will come due to be, and her credit card's at $50 a month, and we add in her auto loan at $150 a month. Her total household debt is $238 a month. So we'll continue working this into our debt to income ratio in the next couple of slides, but I think it's important to explain why we include deferred student loan payments. Those loan payments will probably come due about the same time or during the life of your mortgage payments. So we estimate an amount of the total to calculate that we don't put you into a situation where you couldn't afford your house payment. So it's interesting to note that the national average for school loan debt is about $33,000, and in Oregon it's about $25,000. And if you're looking for more information on your school loan, you might want to visit the National Loan Debt website at www.nslds.ed.gov. And we do realize that there are some loan forgiveness programs out there, and if you're working in public service for 10 years, the balance of your loan might be forgiven, or if you're in the teaching field, if you're teaching for at least 5 years, they give a certain amount of that loan to be forgiven. So you definitely want to look into that and know what your loan payment might be estimated at. Any documentation that you can get regarding your student loan will be helpful for the application process. As a part of your debt to income ratio, your long-term ratio, we're going to include your estimated mortgage payment. So let's first figure out Samantha's estimated monthly Habitat mortgage payment. So with all families, and this varies per household because your income is individual, we set your mortgage payment at 30% of your monthly gross income at the time of your credit application. So that's approximately about a year or so into the programs. But again, the rate at which you go through the program is going to vary for everyone. So her monthly gross income multiplied by 30% comes out to $845 a month. So this includes her principal, her property taxes, and her homeowner's insurance. My guess is that $845 a month is probably potentially lower than what many people are paying in rent right now. So we're going to take that number and we will add it into her long-term debt-to-income ratio on the next slide. So let's calculate Samantha's debt-to-income ratio. We're going to take her monthly Habitat mortgage payment, estimated at $845, add in her total monthly household debt, which we determined was $238, and then we divide that by her monthly income, and we come up with 0.384. We multiply that number by 100 to get the percentage, and we determine that her debt-to-income ratio is 38.4%. Now this matters because mortgage lenders establish a maximum acceptable debt-to-income ratio as a part of the process for approving home loans. And under new mortgage laws, the maximum long-term debt-to-income ratio for qualified mortgages is 43%. You want to talk with different lenders. Other lenders may vary slightly, but the maximum amount is now 43%. Now that we have the debt-to-income ratio established, we start looking a little deeper at what we call the underwriting process, and we have two members of our homeowner selection committee that will financially review your file. We look at the credit report, look at income, we look deeper into bank statements, and we compile all this information into a spreadsheet to get an overall view. And we do this because we want to ensure fairness, and we have trained committees and staff members that will look at the financial capability of each applicant, and the process will also give you a better understanding of what it takes to financially qualify for a home loan and the importance of paying down debt and your debt-to-income ratio. The third component of our selection process is called willingness to partner, and we will review the details of what that means in the next few slides. The four main components of willingness to partner is what we call sweat equity or volunteer hours, savings program towards closing costs for your home purchase, monthly classes and workshops, and also a relationship with a mentor. So within all of this, we look at timely communication throughout the process, both with staff, with mentors, and other agencies. We want to ensure that you have an understanding of the Habitat mission and that you have a willingness to accept the home that is assigned to you, both in size and location. So sweat equity means volunteer hours essentially, and all selected families or individuals are required to complete 500 volunteer hours before purchasing their Habitat home. Each adult in the household is required to serve a minimum of 200 sweat equity hours, and then the remainder can be donated. So if you're a single parent, you have 200 hours to do, and then the rest can be donated by friends, families, or other volunteers. And we split these hours up between the construction site, our restore, required classes, and other pre-approved Habitat projects. So this sweat equity really represents your physical and emotional investment in the mission of Habitat. So it's really a bigger part of three goals, which are the partnership, your pride in homeownership, and the development of skills and knowledge towards homeownership. As a part of completing your sweat equity hours, we have instituted a monthly minimum program where partner families, each adult is required to complete a minimum of 8 hours of sweat equity per month. And we have a strike system in place, sort of a 3 strikes program, where we can ensure that families are staying on a regular schedule, completing your obligations in a timely and efficient manner. So you can look at being in the program for, say, 12 to 15 months and figure out how many hours that might take for you, set a goal, and figure out how many it's going to take for you to do per month and break that down and look at it per week if that helps you. And then compare that against what you have going in your life right now. Are you working full time? Can you fit that in, and can you make that happen? As a part of the willingness to partner requirements, we also require that individuals or families participate in a savings program towards closing costs, and participation in that savings plan will help you establish long-term patterns towards home maintenance and repair, and it also helps in preparedness and education towards owning a home. If the program is available, we ask that families enroll in a match savings program, also called an individual development account through Neighbor Impact or Housing Works, and it's a 3-to-1 match. So we ask that everyone has a $1,000 minimum savings goal, and then you get a 3-to-1 match as long as you're in the program for at least 12 months. Closing costs are the one-time fees that as a home buyer you're required to pay, and those costs total approximately $4,000. So it's a great deal to be involved in the match savings program. You don't have to be involved with Habitat in order to do that, so I would highly recommend contacting Neighbor Impact or Housing Works and talk to someone about an individual development account. You can use those accounts for more than just home ownership. That can be towards ongoing education, it can be towards transportation, I believe. So get a hold of the planners at Neighbor Impact and talk a little bit more about your participation in a program like that. So as a part of the willingness to partner requirements, we also have classes and workshops. Some of those classes are required by the Match Savings Program. Others are monthly homeowner education classes that you attend as a part of the entire group of other partner families going through the program, and we cover things such as home maintenance, property taxes, homeowners insurance, conflict resolution, budgeting, and sometimes we throw in some elective courses that are specific to individual interests. We also think it's important to match you with a mentor as you're going through the program. So your mentor is considered more of a coach to encourage your progress and your readiness. It's another set of eyes and ears, and they're also a communication support between you and Habitat. We ask that the mentor is an experienced homeowner of at least 5 years, but they do not have to be a Habitat expert by any means. We'll give them some training and education. So if you know someone that you would like to be your mentor, we can talk with that person, as long as it's not a supervisor or a relative. And if you don't have anyone in mind, that's okay. We'll try to match you with a volunteer who can be your mentor. And you'll meet outside of our regular Habitat monthly meetings on your own schedule to complete assignments and other activities that continue to prepare you for home ownership. And lastly, as a part of our willingness to partner requirements, we believe in the importance of timely communication. It is important to understand that acceptance into the partnership program is not a guarantee that we'll be able to sell you a home. So you need to meet a number of requirements before you can apply for the Habitat home loan. And we need you to be in communication with us anytime you have changes in your income or debt that might negatively impact your ability to pay a mortgage. So we try to say at least $500. Run that by the Family Services Department, talk about this with your mentor. Even if you've completed all the other requirements and you have been assigned a home, we have to do a credit check again. So things like loss of employment, an increase in family size, taking out new loans, or co-signing on a loan can negatively affect your debt situation. So remember when we discussed the debt to income ratio and that 43% as being a guideline and requirement that we need to keep you under. It's very important that you keep your debt down and your income stable during the process. So we want to work with you and making sure you meet these income guidelines. So communicate any changes before they happen or as soon as you possibly can, and we're on your side to make this work. So we want to wrap around and support what might be happening in your life and any challenges and bumps that you might meet. In the next few slides, we're going to look at affordable housing in Central Oregon. We'll review some of the home details of Habitat Homes, and we'll look a little further into our unique model of home ownership. Generally, when we talk about housing costs, we want you to pay no more than 30% of your income towards housing. If you are paying well over 30%, we would consider you cost burdened, which would mean that you would have difficulty affording other necessities in life, such as food, clothing, transportation, and medical care. When you look at our nation, over 12 million renters and homeowner households are now paying more than 50% of their income towards housing. So a family with one full-time worker earning minimum wage cannot afford the local fair market rent for a two-bedroom apartment anywhere in the United States. So the lack of affordable housing is a very significant hardship for low-income, hardworking households. So with Bend Area Habitat for Humanity, we believe every person should have a decent, safe, and affordable place to live. We work in partnership with our community to create homes in Bend and sell about 6 or 7 homes, working towards 10 in the near future, to qualified individuals and families. And so those loans will be set up as zero interest or zero equivalent loans, and we'll talk a little bit more about those loans in the next few slides. But the mortgage payments, again, are set at 30% of your monthly income, so that becomes affordable for you and your family. So currently, Habitat is moving towards building higher density models of homeownership, such as duplexes and townhomes. And in the near future, we'll be looking at doing a cottage community, which is more of single-family homes sharing an acre lot of land. But our current build is moving into townhomes, and so these are safe homes with strong resale value, and it allows us to get more homes on land that has become very expensive and difficult to find in Bend. Some of the home features include about 1,100 to 1,200 square feet within 2 to 4 bedrooms. Homes have 1.5 baths, and you may have a garage depending on the lot that we build on. And we try to do xeriscaping right now, so things that are native to the area and require little watering and extra cost per month for a family. So we want to keep your costs down as much as possible. So we also use new technologies that are very energy efficient. You'll get in-floor radiant heat systems, tankless water heaters, and maximum insulation. You'll be able to choose from a pre-approved list of items such as your countertops and your lighting fixtures. And I think it's also important to note that our homes will each vary due to the donations that we receive from our community and from individual contractors and subcontractors that we work with. So the number of bedrooms is determined based on your household size. We put children of opposite genders in their own bedrooms, and it's important to keep in mind that depending on your family size, if you have a large family, fitting into the maximum 4-bedroom home is a decision that you have to decide if that works for you or not. It's also important to sit down and really think through whether or not home ownership is right for you. It's not right for everyone. You can look at the advantages and disadvantages of home ownership. You have pride of home ownership. There's research that shows that it creates stability for children and families. There are some lower monthly household costs, and home ownership can help you create and build wealth in your life in other areas as well. Some of the disadvantages are that it decreases your ability to move around. You're tied to maintenance and repairs on that home, and you have a much greater responsibility as a homeowner. If you haven't had a chance to look at a traditional home loan against a Habitat loan, we'll go through a couple of examples here, and you can see how Habitat compares. While we're bound by many of the same state and federal laws as banks and credit unions and other lending institutions, we do have some key differences that are important to understand. So our requirements and criteria of need, ability to pay, and willingness to partner are unique to Habitat. We also require that our homes be owner occupied, and we have something called the right of first offer should you need or want to sell your home back, and we'll discuss that in more detail as we get further into these slides. But we want you to know that even though we have some limited flexibility as your bank or as your partner, we cannot sell you a home if your debt to income ratio is greater than that 43% as required by federal law. So that's true with other banks and other lending institutions as well. So let's look at two different conventional loan examples. We'll look at FHA loan and a conventional bank loan. So down the left-hand column, you'll see the same appraisal and down payment, which will vary depending on the type of loan we're looking at. We'll look at the fee that might be required by that loan, what might be your total mortgage amount, your one-time closing costs, and then your estimated monthly mortgage payment, the taxes, homeowners insurance, and private mortgage insurance that will be added in, and then we'll finally total up that mortgage payment and then also show you what your mortgage payment will be over the life of that 30-year loan. So you can compare and see that both those loans have a significantly higher total payment than the appraised value of the home to start out with. Bend Area Habitat also has two different type of loan examples to offer you. One is a Habitat loan, and the other is what we call a zero equivalent loan. So we start with that same appraised value, which becomes the sales price of the home, and we look at what types of other programs that we might be able to partner with in order to start buying down the sales price of that home or the loan amount that you would be paying on. So we have partnerships with the City of Bend, and we work with city development block grant funding. We also are able to receive, as an affordable housing builder, some system development cost discounts, so that brings the price down. And we pause for a second there, and we go back and we look at your homeowner affordability. So remember that monthly income example, multiply that times 30%, and we had $840. So we take out the taxes and insurance, and we multiply your affordability by the number of years that that home loan would be for you. So we're looking at a 30-year example. So your affordability is $212,400. However, the sales price is $243,000. So there's a difference there of a little over $3,000, which then becomes a silent second that sits on that loan, and your loan total now gets down to your affordability. So that's what your principal payment is based on every month, and you can break that down for a family of four. We're looking at a $590 mortgage payment per month, and we add back in the taxes and insurance so that you're back at that $850 of affordable mortgage payment each month. The term zero equivalent loan is really because it's equivalent to a zero interest Habitat loan. So when you break it down, you'll be charged a 3% interest. Habitat would sell the loan to a bank who then provides a mortgage payment that is equal to the equivalent of what Habitat would have charged you. You're charged a 3% interest, so you can write that off. So it's a win for you and for Habitat, because Habitat then is given the mortgage amount less the 3%, and we put that right back into construction of the next Habitat home. So when possible, we try to provide zero equivalent loans because we believe it's a benefit for both parties. If you have more questions about zero equivalent loans, feel free to call the Homeowner Services Department or the finance manager at Habitat to discuss those in a little more detail. So let's take those three loan examples, the Habitat Zero Equivalent Loan, the FHA loan, and the bank loan, and look at that 30-year loan side by side. So you can start with the same home price. The down payments, Habitat doesn't require a down payment on the home. The total closing costs, so with some of those bank loans, they can vary depending on the loan. and then the taxes, homeowners insurance, and private mortgage insurance. So coming up with a total monthly payment, and then you're looking at the life of what you're paying over that loan. Quite a significant difference. Some of the other benefits of being involved as a Habitat partner family are that you gain a group of supporters that really rally around your success. Resource referrals whenever needed. We're very much a networking group and about giving each other a hand up, and you'll receive lots of opportunities for both personal and professional growth. One of the unique aspects of Habitat loans is our right of first offer, and this is about having the option to purchase back your home should you want to need or sell it, so that we can keep it in the affordable housing options for our community. So it's important to understand that during the first 10 years of homeownership, your home can be purchased back for the amount that you've paid on your principal, which does not include your taxes and insurance. So although you won't be making a profit in the first 10 years, you won't have lost the money to interest as with a typical home loan, conventional home loan. However, the savings that you have incurred over the years will afford you other opportunities. So after 10 years of homeownership, the purchase price will be based on a shared equity appreciation value. So the longer you're in your home, the more shared appreciation that you have. So if we don't or are not able to buy back your home, then you're free to sell it on the open market and pay off any other loans or grants that might be on those homes, such as the silent seconds. And it's really about a partnership to provide affordable housing in the community. This is your opportunity to also pay it forward to others who are struggling like you might have coming into homeownership, and it is a great way to be involved in the partnership and family of Habitat. We talked about the sales price and your affordability in some of the earlier slides, but breaking it down a little further, you can see how we set the sales price of the home compared to your affordability, and we try to find other buy downs, such as any excess IDA funds after your closing costs are paid, to get that mortgage payment down closer to your affordability. But sometimes we're needing to put silent seconds on there, and then we get it down to that affordability amount. But it's important to remember that what you pay on your home each month is based on your affordability. So your neighbor's is going to look a little different, but the sales price will be set on the appraised value. In the next slide, we'll talk about how donations or discounted professional services might affect your home sales price. A lot of times we'll get questions on whether or not a donated professional service or a materials discount will help reduce the price of your home. And unfortunately, the answer on that is no, but we do like to work with your contacts and connections subcontractors on getting their services applied to not only your home but potentially other homes, and how that can affect the entire group of affordable housing families within Habitat. So your sales price, remember, is set on the appraised value of your home, but we continually fundraise and work with donors and professionals to offer a relationship where we might be able to give them additional work on other homes, but in hopes that we also will be able to work with individuals and donors and contractors to affect affordable housing in Bend for other families as well. So again, it's a little bit of the paying it forward and the community of Habitat and how we work together as a family. Okay, now that we've talked about the partnership program, we're going to look a little bit more into the two-part application process. So part one includes the partnership program application, has 3 steps, and it is about 12 to 18 months once you get program acceptance into the program, and then you move into what's called part 2, which is the actual home loan or credit application, and that has 2 steps to it as well. So if you complete the program requirements with no disqualifying changes, then you can apply to purchase a home loan. And acceptance into the partnership program is, again, not a guarantee that we'll be able to sell you a home, but if you meet all of the requirements, then things are looking good. So let's start looking at the application process. So there's 5 steps towards Habitat homeownership, and step 1 through 3 includes a preliminary program questionnaire, which you may or may not have completed, and that's not necessarily a requirement. But the partnership program application is what we'll be making available to you, and we'll talk about those deadlines coming up. And then it also consists of a home visit and board approval in order to get into the partnership program and become accepted into the Habitat for Humanity program. Step 2 would be a notice of action taken. So once we hit that deadline, we'll either send you a letter that is a program acceptance or a denial letter. And then it's important to note that this can take about 8 to 12 weeks to get through. Step 3 is the actual signing of the partnership agreement. It includes a review of the program again and all of the requirements, sweat equity, savings. Make sure you understand what we're going through today and what you're moving into. And the entire process of getting through the partnership program can be, as I said earlier, about 12 to 18 months to complete. It varies by family, so everyone moves at a different pace. And we consider these first 3 steps towards homeownership to be a pre-qualification for home loan purposes. Steps 4 and 5 are further down in the process. We have you fill out a home loan credit application, and we do a preliminary loan document review. So that happens upon completion of your program requirements. We do a re-verification of your income and other eligibility criteria, and if there's no disqualifying changes, we have you apply for the mortgage loan. Step 5, your loan's approved, and we purchase your home. We have the celebration and the party. So the application process for the partnership program will consist of required documentation. There's some essay questions that you can answer. We'll ask you to have 3 letters of recommendation, 1 personal, 1 from a landlord, and 1 from a current neighbor. And we will, should you make it through the underwriting process and still look like you're qualified, we'll schedule a home visit, and then it goes to board approval. So because of the increased volume of applications, we ask that when you turn in your application that you give us a complete application, that you do not include any original documents or ask us to make copies. We just don't have the capacity to do that anymore. So do your best to turn everything in a timely manner, and this is also seen as an indication of your preparedness and your interest in priority setting with regards to mortgage and housing. So let's review the deadlines that are coming up for you. So the information session on May 12th, or if you're watching this as a video presentation, then you have until May 27th to watch the presentation and also turn in your application. So the deadline for the program application for everyone is Friday, May 27th. We have a drop box on the outside of our building. If no one is here, you can keep your application in the envelope and return it into the drop box. Attention Family Services. We will send out initial notices by June 7th or sooner, so you'll either receive a verification letter that we received your entire application, or you'll receive a notice of incomplete that we're missing some items, and we'll give you an additional deadline for which to return those missing items. If the committee determines that your application meets the basic program guidelines, then we'll schedule a home visit. So open up your schedules between June 16th and July 8th for a 1-hour home visit, and we do want to ask that everyone is present in your family at that home visit. If we determine that you didn't meet the general qualifications, you will receive a denial letter from us explaining the reasons why. If it's related to your credit history, we'll give you your credit score and information on how to dispute something on your credit report. So we want you to succeed, and so we want to provide you with opportunities to be able to come back on the next round and apply again. So if we get through the underwriting process, the next phase of the selection process is to schedule a home visit by 2 committee or staff members, and we'll look at things like the condition of your rental home, your neighborhood, your family size versus the number of bedrooms that you would qualify for, your willingness to partner, And it's also an opportunity for you to ask questions or share more about yourself and your situation. And then the Homeowner Services Committee, Selection Committee, will have a final review to determine board recommendations at our monthly meeting in July. And then finally we'll make a recommendation to our board meeting, to our board of directors, which is on July 27th. And by July 28th, we'll be able to notify you of program acceptance. Some of the questions that are commonly asked at orientation sessions are provided in a frequently asked questions at workshops and meetings handout that you can find also attached to our website. But if you have other questions that aren't answered in these, then feel free to call me or email me, and we can try to go through those questions individually.